The way the government finances are set up, we continue to spend more than we bring in tax revenue, and therefore the debt is growing, and therefore as interest rates go up, the interest costs are growing. And it's, as James Lavish has so well pointed out in all his work, we're in a debt death doom loop where higher interest rates require bigger deficits, which mean you got to sell more debt. Selling the same amount of more debt into the same amount of demand means higher interest rates, and winch rush repeat, right? I mean, it's a vicious negative feedback loop, and I think we're getting to the point where the can kicking is going to get very, very hard.
For centuries, governments have wrestled with the challenge of monetary inflation. Even the gold standard faltered as the supply of gold expanded slowly at 1.7% annually, fueling inflation. However, the advent of Bitcoin has revolutionized the concept of money, offering a solution to this age-old problem. Initially met with skepticism akin to the early days of the internet, Bitcoin has gradually gained acceptance as more people understand and utilize it, evolving from niche to mainstream. Bitcoin's adoption trajectory mirrors that of cell phones, once bulky and expensive, now ubiquitous. As Bitcoin garners attention from institutional investors and Wall Street, its potential is increasingly recognized. Visionaries such as Fidelity's Abby Johnson have embraced Bitcoin, seeing its capacity to reshape the world and generate profits. Bitcoin is poised to overhaul the financial system, offering sound money amidst a broken framework. In a recent interview with podcaster Sean Clarke Lawrence, Larry Lepard discusses the looming financial crisis and the perilous debt cycle facing the US dollar. Larry also explores potential Federal Reserve responses to mounting pressure, highlighting Bitcoin's role in safeguarding our financial future. For insights into the future of money and how Bitcoin might liberate US, continue listening to the interview.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
The money is broken, as we were talking about before the show, and that's been a long process. It started with the creation of fractional reserve banking, the Federal Reserve. It continued throughout the 20th century and culminated in the gold standard being abandoned by Nixon in '71. And it's just kind of gotten cumulatively worse and worse and worse. And now I think we're really in the point where it's becoming more apparent to everybody, and events are accelerating. So it's more important than ever to, if you're trying to save money, save it in things that the government can't print. And
Yeah.
Bitcoin is probably the best choice. And gold and silver are not bad choices behind Bitcoin. I think Stein's law applies, which says that if something cannot go on forever, it'll end. I mean, the math is against them. They can't grow debt at a rate in excess of the rate of growth of GDP without eventually having the interest cost on the debt, create a crisis. And but you're right. I mean, it's gone on longer than it should have, and it could go on for another 5 or 10 years. Some people think longer. I kind of don't. I think we're going to come to a head here, in the next 5 or 10 years. But I also thought that it was going to be conclusive in 2008, and they managed to kick the can there. They've now taken it up to the sovereign currency level. I mean, we had a dot-com bubble, we had a housing bubble. Now we've got a sovereign currency bubble. And the way the government finances are set up, we continue to spend more than we bring in tax revenue, and therefore the debt is growing, and therefore as interest rates go up, the interest costs are growing. And it's, as James Lavish has so well pointed out in all his work, we're in a debt death doom loop where higher interest rates require bigger deficits, which mean you got to sell more debt. Selling the same amount of more debt into the same amount of demand means higher interest rates, and winch rush repeat, right? I mean, it's a vicious negative feedback loop. And I think we're getting to the point where the can kicking is going to get very, very hard. I mean, right now we're in an interim period where we had a lot of money printed in the COVID example. They've managed to kind of slow that down somewhat and tighten up a little bit by reducing the Fed balance sheet from 9 to 7 trillion I'm talking about. But, eventually something else is going to break, and the system will not have enough money in it to function. And they'll be faced with a choice that they're always faced with, which is, print money to keep the system going, knowing that the risk of that is inflation, or don't print money and let everything collapse, knowing that looks something like 1929. And we know what they're going to choose because we've seen them choose it for 100 years. I mean, they chose it in Silicon Valley Bank. They chose it in 2008. They chose it with COVID. They chose it with LTCM way back in 1998. I mean, I've seen all of these in my career, and they just keep choosing the same thing. And and the excuse they'll use is the one they used in '08. I mean, Henry Paulson went to Nancy Pelosi, got on his knees and said, look, if you don't give us this $700 billion for TARP, the ATMs aren't going to work tomorrow. Right. And,
Yeah.
they kind of have a gun to your head and they threaten, the Armageddon of the financial system unless you print. And guess what? The politicians put into that condition, put in those circumstances, they will print. So we know they will print. And I think in the next print, the Fed balance sheet goes to 20 trillion. And the thing that's important here, Sean, is that with each of these events, more and more people are coming to see it. I mean, a lot of people saw it in '71, and there was a big run in gold then, and a lot of the hard money people got it, but they managed to contain that by raising interest rates very high, and they could do that because sovereign debt was a small percentage of total GDP. But since then they've let things go in the other direction, and it just keeps getting cumulatively bigger. So to timing, I think we're going to see fireworks in the next 5 years, and I personally can't see how this system holds together more than 10 years. So I mean, I think we're on a sound money standard, or we have hyper Bitcoinization sometime between now and 2034.
The collapse of the financial system has been a slow process, rooted in significant events like the establishment of the Federal Reserve and the abandonment of the gold standard in 1971. Since then, debt has outpaced economic growth, exacerbating the situation over time. This imbalance has perpetuated a vicious cycle where longer-term debt is continuously issued to cover larger deficits, leading to escalating interest rates. The inevitability of this debt cycle makes postponement challenging, necessitating ongoing money printing to sustain the current economic order. Recent decisions, such as those made in 2018 and during the COVID-19 pandemic, have exacerbated these challenges. Growing awareness of this precarious reality indicates potential future disruptions within the next 5 years. Let's delve deeper into Larry's insights in the interview to understand the origins of the debt cycle and the increasing adoption of Bitcoin.
For 2,000 years, we've had the problem of monetary inflation. I mean, the Romans had it, and every country and government since that time has had the problem, even to a degree when they were on the gold standard, because the supply of gold grows at 1.7% a year, which that means you compound that. That means the amount of gold that we hold in the world doubles every 40 years. Monetary inflation and monetary debasement is a problem that's existed for thousands and thousands of years, and that's why the invention of Bitcoin is such an amazingly significant technological innovation. Because it takes this couple thousand-year-old problem. I don't know, when the internet was introduced, how did people wake up to that? I mean, there were those of us who were in it early, who knew what it was, who were excited about it, who realized it was going to change the world. But, at the time, my 70-year-old mother at the time was like, why the hell do I need this? And she wasn't going to get a modem and dial up and link into the internet. But, maybe 10 years later, when all her kids had it, we were emailing each other, and she wasn't on the email list. She said, hey, set me up in this internet thing. I mean, it's word of mouth, and it's penetration and knowledge on the part of the populace, right? And so, I figure there are probably about 10% of us who kind of get it or are aware of it. Maybe it's even less than that, but let's generously say maybe 10% of the developed world is kind of involved in this whole trade and in this area. And so, we're going to get to 90%. And, if you use the Gladwell theory of the tipping point, it took us 15 years to get here. In another 15 years, we'll be at 90%. And I saw this with cell phones. I mean, the first cell phones came out, they were clunky. It was 40 cents a minute. Only the richest of the rich had them, and they make 5-minute calls, but they really needed to make those calls, so they paid for them. Well, now we all have cell phones. Calls are almost free. The monthly charge is de minimis for somebody who's doing reasonably well. And this is how technology works, right? It starts off as being a little clunky and a little misunderstood, and people are resistant to it. I mean, a lot of people are like, it's magic internet money. When you get all the normal pushback, but over time, they come to see that, hey, hang on a second. Gee, that thing you bought has gone up a lot, and the thing doesn't. This is an asset. This is something that if I buy, I can get a good return on it. We're encountering some of that right now. The thing we're having to overcome is that a lot of people are looking at it and say, okay, I get it. I like the thesis. You're probably even right. But gosh, how can I pay 60,000 when you bought it so much cheaper? And what I'm trying to convince them is that, well, it was like, how could I pay, 2,000 or 300 or 500, whatever I started buying it, when Max Kaiser bought it for 2,
Yeah.
right. And someday, your grandkids will be buying, the price of Bitcoin will be $2 million, $3 million a coin. And they'll be saying, hang on a second, you mean to tell me you were buying a whole Bitcoin for $60,000 in 2024? Oh my God, how did that happen? So, it's kind of a cumulative thing as it gets adopted. It arguably brings some negatives because I don't have a high regard for Wall Street and some of these people, but in general, it also brings a lot of positives. I mean, the ETFs, as an example, as Saylor has pointed out, I mean, this is an enormous positive step. I mean, one of the biggest complaints that I used to hear when I was introducing it to people was, well, yeah, that's too far outside the system. The government's going to shut it down. Well, when the SEC approved it, that kind of put a kibosh on that argument, right? I mean, now, there's not to say they won't in the future change their mind as they realize that it's ruining their system, but for now anyway, the ETFs have approved it, and then Wall Street has jumped on board because they can see that it is an attractive asset. It is going to perform well. They can get a fee on it in terms of managing an ETF, and so Wall Street's all about making money, and they recognize that it could be the future. And the more visionary ones, I mean, Fidelity's been at it for quite some time. Abby Johnson got it very early. She was probably the leading kind of Wall Street type or investment management type to pick up on it. But like I say, I don't have an enormously high regard for Larry Fink. I know what he did, what he is, and where he's been. But that's fine if he now gets it and understands what it is and wants to support it. Well, that's all good. I mean, my view is anybody who wants to support this new invention, which I believe is going to change and improve the world, as well as go up a lot in price. But forgetting all of that, I really want to see the world get fixed because I think the world is terribly broken as a result of the lack of sound money and living in the fiat system that we live in.
Meanwhile, net inflows to U.S. spot Bitcoin ETFs surged to $43.19 million, underscoring Bitcoin's strength and its appeal as a compelling long-term investment, particularly in challenging economic times. In the broader economic context, Bitcoin's attractiveness becomes evident as governments resort to money printing to manage debt cycles, potentially leading to inflation. Bitcoin's decentralized nature and fixed supply offer a stark contrast, positioning it as a hedge against inflation and currency devaluation. This characteristic attracts investors seeking stability amid a volatile financial landscape. The cyclical nature of debt and continuous money printing intensifies concerns about currency stability. In contrast, Bitcoin's limited supply and decentralized architecture provide a sanctuary from the vulnerabilities of traditional financial systems. The recent influx of ETF investments signals a growing recognition of Bitcoin's potential to preserve value and offer financial security amidst ongoing economic uncertainties. What is your understanding of the debt cycle, and do you believe Bitcoin offers a solution? How optimistic are you about Bitcoin's future? Please share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.